Imagine standing on a quiet beach at dawn. The tide rolls in, then out. Slow, steady, relentless. That's the economy. It doesn't move in a straight line, but over time it rises like the tide. And if you look close enough, the stock market is just the foam riding that water. Chaotic up close, but part of something much larger underneath. For centuries, economies have grown roughly in step with human progress, new tools, new ideas, new ways to produce value. It's uneven, unpredictable, and sometimes painful, but the overall direction has always been forward. The world learns, adapts, rebuilds, and moves again. The market, though, has its own moods. When optimism reigns, investors are willing to pay more for each dollar of earnings, price-to-earnings ratios rise. When fear dominates, those same profits are suddenly worth less on paper. The underlying companies might not change much, but our perception does, and perception drives everything. The challenge isn't in spotting growth, it's in surviving the mood swings between euphoria and despair. Because most people don't invest in companies, they invest in feelings. They chase excitement when prices soar and hide when they fall. They tell themselves stories to justify every move. And if you zoom out, the market's greatest risk isn't a crash, it's the human instinct to act too soon or too late. This is where the illusion begins. Everyone believes they can outsmart the crowd, that they'll sell at the top and buy at the bottom, that somehow they'll be the exception to the rule. But statistically, we can't all be above average. If everyone's trying to be the smartest person in the room, who's left to be wrong, still, hope is powerful. It's what keeps us watching the tickers, reading the charts, trying to find the hidden pattern. The dream of beating the system never dies. It just changes shape, from gold rushes to dot-coms, from crypto to AI stocks. But here's the truth. You don't beat the game by playing harder. You beat it by playing differently. Contrarian thinking isn't about doing the opposite of everyone else. It's about seeing differently. It's not if they buy, I sell. It's if they're looking at the short term, I'll look at the long one. If they're gambling on headlines, I'll bet on fundamentals. If they're chasing attention, I'll wait for value. That's what separates the noise from the signal. In the early 2000s, a handful of investors noticed something strange. Ordinary people were buying homes with no income, no savings, no verification, just blind faith that prices would always rise. The housing market wasn't growing. It was swelling. They didn't know when it would burst, but they knew it couldn't last. That's the uncomfortable truth about every boom. It's built on the belief that things will never change, and yet they always do. The lesson isn't to avoid risk. It's to understand it, to know when growth becomes greed. Because wealth isn't made by predicting the future. It's made by surviving it. And the people who survive are rarely the loudest. They're patient, grounded, quietly aware that cycles come and go. They don't rush to buy when everyone's euphoric or sell when everyone's scared. They know the market's most powerful force isn't volatility, it's time. When you stop reacting to every wave and start trusting the tide, something changes. You begin to see wealth not as a game to win, but as a story to live through, one that rewards endurance more than brilliance. The strange thing about cycles is that everyone claims to understand them, but almost no one behaves as if they do. When markets rise for a few years, optimism quietly turns into entitlement. People forget that tides retreat. They build sandcastles as if the ocean has retired. Then one morning, the water returns, and everything built too close to the shore disappears. This isn't just about stocks or housing bubbles. It's about how humans process uncertainty. We crave stories that make sense of chaos. We want to believe that success comes from skill, not timing, that wealth can be earned without patience. But patience is the hardest skill of all, because waiting feels like doing nothing, and doing nothing feels like losing control. That's why so many investors chase movement, buying something, selling something, refreshing charts, convincing themselves they're managing risk, when in reality, they're managing emotion. Real wealth builders treat boredom as a strategy. They know that progress often looks like stillness. It's not glamorous. It's not tweetable. It's the quiet discipline of staying the course when the world screams otherwise. When you understand that, you start to see opportunity differently. It's not found in the crowd's excitement, but in its exhaustion. When everyone gives up, when headlines scream, end of growth, when optimism has vanished, that's when value hides in plain sight. The best opportunities rarely announce themselves. They whisper. They look uncomfortable. They make you question your judgment. And that discomfort is usually the price of entry. That's why contrarian investors rarely look like geniuses in real time. They look stubborn, foolish, even wrong until the tide turns. Because conviction is lonely long before it's rewarding. The same rule applies beyond investing. Think of careers, relationships, health, or even creativity. Growth requires discomfort. There's always a lag between effort and reward, between planting and harvest. The impatient give up halfway and call it bad luck. The patient stay through the dull, thankless seasons and call it life. Every success story has that invisible chapter, the waiting period, where nothing seemed to work. No applause, no validation, no visible progress, just faith that the process itself would pay off. And that's what markets really mirror us. They rise and fall with our confidence, our fear, our memory span. When optimism fades, it's not the economy collapsing, it's our patience collapsing. The people who thrive aren't immune to emotion, they just refuse to let it dictate their timeline. You don't have to predict cycles, you just have to endure them. Because every bear market eventually gives birth to a bull one. Every pessimistic decade becomes the seedbed for the next era of growth. It's not a question of if, only of when, and whether you'll still be standing when it arrives. That's why on the passive path, we talk less about chasing gains and more about building habits. Because habits are what survive chaos. The market rewards behavior, not brilliance. Patience, discipline, and emotional control, those are the compounding assets that never lose value. At some point, you realize wealth isn't about timing the tide. It's about learning to breathe underwater. And when you do, you'll notice something. The waves stop feeling like threats. They start feeling like rhythm. You stop trying to control them and start moving with them. That's the moment wealth stops being a finish line and becomes a lifestyle. The calm kind. The kind built slowly, quietly on decisions that look boring but feel right. Because in the end, the secret isn't about beating the market. It's about mastering yourself.